Hey everyone, this is Ronak Ahuja. I welcome you all again. Today we'll be discussing the due dates for filing of the income tax returns for the financial year 2024-25. Along with the income tax returns that are due for filing this year, we'll also be discussing the income tax forms that are required to be filed along with the income tax returns. Not only this, what happens in case we do not file the return within the due date will also be discussed in this video. So let's quickly begin. Now, before discussing on what exactly the due dates are, let's first try and understand for what period are we filing this income tax return. For all the incomes that are earned during the period 1st of April 2024 and the 31st of March 2025, the returns will be filed during the financial year 25-26. This means for all the incomes that are earned during the financial year 24-25, the returns will be filed during the financial year 25-26. Now, this also means that all the TDS that has been deducted during the financial year 24-25, the refunds for the same can be claimed in this return of financial year 24-25. Now, the due dates of the ITR depends upon the type of the assessee, whether it's an individual or an HUF or a partnership firm or a company. Thus, while discussing the due dates, we'll be doing it assessee wise or the taxpayer wise. Let's quickly move on to that. So let's begin with the due dates for individuals. The due dates of ITR in case of individuals will be determined as per two conditions. The first one is whether the tax audit report is applicable to the individual or not, and the second one is whether the transfer pricing provisions are applicable or not. In the first case, if neither the tax audit nor the transfer pricing provisions are applicable to the individual, then in such a case, the due date for filing of ITR would be 31st of July 2025. In such a case, neither of the two audit reports would be required to be submitted. Moving on to the second case, where in case the tax audit report is applicable but the transfer pricing audit report is not applicable, then in such a case, the due date for filing of ITR would be the 31st of October 2025. In such a case, the tax audit report would be required to be filed by the 30th of September 2025. Moving on to the third case, where in case the tax audit is not applicable but the transfer pricing provisions are applicable, then in such a case, the due date for filing of ITR would be 30th of November 2025. And the transfer pricing report would have to be submitted by the 31st of October 2025. Moving on to the fourth case, where in case both the tax audit as well as the transfer pricing provisions are applicable, then in such a case, the due date of filing of ITR would be 30th of November 2025. And both the audit reports will have to be filed by the 31st of October 2025. Now, where in case an individual to whom neither the tax audit nor the transfer pricing provisions are applicable, but if such individual is a partner of a firm to which tax audit or the transfer pricing provisions are applicable, then in such a case, the due dates would differ. In such a case, if the transfer pricing provisions are applicable to the firm, then in such a case, the due date of filing of ITR for the individual would be 30th of November. However, if the transfer pricing provisions are not applicable to the firm, but the tax audit provisions are applicable, then in such a case, the due date for filing of ITR for the individual would be 31st of October. Please note, the tax audit report and the transfer pricing report in such a case would be submitted only by the firm and not by the individual. It's just the due dates get deferred for the individual as well. I hope this clarifies. Furthermore, where in case an individual wants to opt for old tax regime, it will have to file a separate tax form, which is Form 10IEA. This has to be filed on the income tax portal after logging into your account. Please note, this will have to be filed before filing of the income tax return. Moving on to the third thing. The third thing says, where in case the tax audit report is applicable, the same will have to be filed in Form 3CA and 3CD or 3CB and 3CD, depending upon a few conditions which will be discussed in our upcoming videos. Last but not the least, the ITR that is applicable in case of individuals would be ITR 1, ITR 2, ITR 3 or ITR 4. The individual can choose in between of these 4 ITRs. Remember, which ITR is to be chosen from out of the above 4 ITRs depends upon the nature of the income that you have earned during the financial year 24-25. To help you all out with that, we have created a separate video. The link for that video is mentioned in the comment section. You can visit that link and have a look at it. Before moving on to the next point, let me first discuss the point that I missed. Where in case the individual is required to submit a transfer pricing report, the same would be submitted in Form 3C EB. Now, most of you would be wondering, when is the tax audit and transfer pricing applicable in respect of individual? So let me give you a brief idea about it. The tax audit and the transfer pricing provisions are applicable to the individual only if they run businesses and satisfy certain criteria. Where in case the individuals who run businesses have turnover exceeding rupees 1 crore during financial year 24-25, then in such a case, they'll have to get the tax audit done. Also, this would be applicable to professionals if their gross turnover exceeds rupees 50 lakhs. The transfer pricing provisions are applicable only in case the individual businesses enter into international transactions or specified domestic transactions beyond a permissible limit. The transfer pricing provisions are generally not applicable in cases where the people do not engage in transactions with related party. I hope this clarifies. For further understanding on these two topics, the links to the video have been shared in the comment section. You can refer to those links. Now, moving on to the due dates for HUFs, AOPs, BOIs, partnership firms and LLPs. Let's move to that. Due dates for HUFs, AOPs, BOIs, partnership firms and LLPs. Here again, we'll be seeing the same two conditions. If the tax audit report is not applicable and the transfer pricing report is also not applicable, then in such a case, the due date of filing of ITR would be the 31st of July. In the second case, where the tax audit is applicable but the transfer pricing is not applicable, then in such a case, the due date for filing of ITR would be 31st of October. And the tax audit report will have to be filed by the 30th of September. In the third case, if tax audit is not applicable but the transfer pricing is, then in such a case, the due date for filing of ITR would be the 30th of November. And the transfer pricing report will have to be filed by the 31st of October. In the fourth case, in case both the reports are applicable, then in such a case, the due date for filing of ITR would be 30th of November. Both these two reports will have to be filed by the 31st of October. Moving on, the HUFs are allowed to file ITR 2, 3 or 4 based on the nature of the income earned. The partnerships will be allowed to file either ITR 4 or ITR 5. For rest of the assessees, that is AOPs, BOIs and LLPs, only ITR 5 can be filed. Moving on, where in case the HUF wants to opt for the old tax regime, it will have to file Form 10IEA, just as in case of individuals. Here again, this has to be filed before the filing of ITR. Furthermore, where in case tax audit is required to be done, Forms 3CA, 3CD will be filed or Form 3CB, 3CD will be filed. In case of transfer pricing reports, Form 3CEB is to be filed. Now, moving on to the due dates for companies. Companies other than the companies engaged in religious and charitable work. Here again, the same two conditions will have to be checked again. Where in case neither the tax audit nor the transfer pricing provisions are applicable, then in such a case, the due date of filing of ITR would be the 31st of October. In the second case, where the tax audit is applicable and the transfer pricing is not applicable, then in such a case, the due date of filing of ITR would be 31st of October. And the tax audit report will have to be filed by the 30th of September. In case the tax audit is not applicable but the transfer pricing is, then in such a case, the due date of filing of ITR would be 30th of November. And the transfer pricing report will have to be filed by the 31st of October. In the fourth case, where both the tax audit and the transfer pricing is applicable, then in such a case, the ITR will have to be filed by the 30th of November. And both these reports will have to be filed by the 31st of October. Now, companies other than the companies that are engaged in religious or charitable activities will have to file their income tax return under ITR 6. Where in case the MAT provisions are applicable to the company, then in such a case, it would be required to file Form 29B. This Form 29B will have to be filed at least 1 month prior to the due date of filing of the ITR. Now, where the companies want to opt for concessional rate of taxes, then in such a case, they'll have to file a separate form for that. Say for example, if it chooses section 115BA, then in such a case, it will have to file Form 10IB. In case it chooses concessional rates as per section 115BAA, then in such a case, it will have to file a form called 10IC. In case it wants to opt for concessional rates as per section 115BAB, then in such a case, it will have to file Form 10ID. Here again, in case tax audit report is to be filed, it has to be filed in Form 3CA, 3CD. And in case of transfer pricing report, it will have to be filed again in Form 3CEB. Now, the question is, what happens if we file the return after the due date? That's covered in the next segment. What happens if we do not file the ITR on time? Certainly, there are some consequences attached to it. In case we do not file the ITR on time, that is within the due date, we would be required to pay an additional fee under Section 234F, along with interest under Section 234A. Now, where the total income of the taxpayer does not exceed Rs 5 lakhs, then the additional fee would be Rs 1000. Where in case it exceeds Rs 5 lakhs, the additional fee would rise to 5000. Moving on to Section 234A, where in case the net tax liability does not exceed 0, then in such a case, no interest would be payable. However, if the net tax liability exceeds 0, then in such a case, interest would be payable at the rate 1% for each month or part of the month on the net tax liability. Now, how do we calculate the net tax liability? Net tax liability equals the total tax liability minus the TDS or the TCS minus the advance tax paid during the financial year 24-25. Please note that fee under Section 234F as well as interest under Section 234A will have to be paid before the ITR is filed. So there is no escape from payment of this additional fee or interest. So it's better to file returns on time well within the due date. However, a more important question would be, can we defer the filing of ITR for as long as we want? The answer is no. You can file a delayed return only up to the 31st of December 2025. No return for the financial year 24-25 would be filed after the 31st of December 2025. So these were the due dates for filing ITR or filing of other income tax forms for different assessees. In case you failed to follow, please leave us a feedback in the comments section or write us a mail at talklevies@gmail.com. Thank you and stay tuned.